Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Tech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now over the weekend we've had a fair bit of news out of China, and that has impacted sentiment both ways. First of all, on Friday afternoon we had some new short selling regulations which drove the markets lower, and into the weekend we then had the Reserve Bank of we had the reserve requirement ratio being slashed by 100 basis points. Now that's the biggest cut in the reserve requirement ratio since 2008, and certainly has helped to drive sentiment back higher again. Mining stocks and commodities have all been pushed higher on the back of that, and certainly it's helped to support the commodity currencies which are sort of on the more riskier end of the scale. Now that is on China, but certainly the markets remain fairly cautious in terms of how everything's going with regard to Greece and the Eurozone. Greece continues to try and negotiate over its economic reform packages, and certainly the negotiations with the Eurozone are not going particularly well according to certain figures in the know. And it could even mean that Greece is being pushed possibly towards an exit from the Eurozone if these all if it all continues like this. They're due for a repayment of 747 million euros on the 12th of May, and they certainly need the next tranche of the bailout money in order to pay that. That next tranche of the bailout money is 7.2 billion euros, and certainly the markets are getting a little bit scared about this. You're seeing Greek bond yields spiking quite considerably higher, and certainly there is the potential there for Greece to potentially even exit the Eurozone. So there's a lot going on which could impact on sentiment negatively regarding that. In terms of the US, the economic data continues to drive the dollar higher and lower throughout last week. It was fairly volatile, and we had across the week pretty much a negative outset from the data, but subsequently we've just started to find a bit of support. Interesting that into this week the dollar index has started to find a bit of support, euro and cable pulling lower, and dollar yen finding a bit of support as well. So it is interesting because into this week we've got a bit of housing data. We've also got the manufacturing or the flash PMIs for the US as well. So certainly the focus will remain on that data. So where are these FX markets looking? Well, certainly the euro-dollar pair has just started to come off again. There is a twin pivot level that I'm looking at between 108 figure and 109 figure, and just between those two we've had a peak at 108.50, and it started to fall away again, possibly forming a short-term top pattern that would imply a bit of a correction. Cable is a similar sort of story, but that recovery that we saw in cable has been more pronounced. It's back to, it sort of came above the $1.50 big figure ceiling, but that ceiling level remains intact because it didn't quite close above it, and certainly the move seems to have just rolled over as it has with the euro, putting pressure on the 149.20 initial supports, and it looks again, if that breaks, then it could come back down towards perhaps even 148 figure in the near term. Dollar yen, big support at 118.30, and that has held intact today. Slight bit of element of support coming in back for the dollar. There's a big pivot level at 119.40, so you've got a couple of levels there between which the dollar yen is trading. As I said earlier, this news out from China over the reserve requirement ratio has helped to prop up these commodity currencies. The Kiwi, the Aussie, and also the Loonie performing well on Monday, and certainly if that continues, it will be interesting because these really are approaching some key levels as well against the dollar. So lots going on for the dollar this week. Could see either which way the outlook really goes in the coming weeks. So moving on to indices, well, certainly the earnings season in the US ramps up this week. We've got a lot of the big tech companies reporting earnings. We've got like Google, we've got Amazon, we've got Facebook, all reporting earnings this week. So certainly big focus will be on how they're performing. International earnings will be a big one because obviously that translation of the strong dollar that we've had, and the outlook statements of some of these companies are still citing problems with that strength of the dollar. So the S&P 500 has been in this trading range, and it continues to remain there. So you've got a move between with the big ceiling at 21 15 up towards 21.20, and that is sort of the resistance band that it can't quite get through in the past few weeks. It's interesting because it's consolidating between that and on the downside as well. So what are we looking at in terms of DAX? Well, the DAX came off sharply last week, and that is again a bit of a negative correlation with the euro. As the euro's rallied, the DAX has come off because DAX has big exposure to the exporters, and that DAX needs to find support above 11,620, which is the big key support level. And at the moment on Monday, it's held that support and fairly sized rally, but still, if the DAX continues to fall away again, then it could come under pressure. FTSE looks a little bit better actually for the first time in a while. Actually, the support at 6,975 held on Monday, and that's pushed it back above the 7,000 level. Again, the big weighting in the basic resources stocks has helped FTSE on Monday with the movement out of China in the reserve requirement ratio and the easing measures that they enacted there. So that's helped FTSE push higher. Now, okay, what about gold though? The gold price has been just consolidating really in the last few weeks. Nothing really too significant in terms of upside moves or downside moves. It continues to find support above 1178 and below 1224. It's sort of stuck in this range near term. It sort of looks like almost as though it needs a bit of a catalyst to make it sort of break either way. So throughout this week, the rest of this week, in terms of the economic calendar, we've got, as I said, quite a lot still going on. We've got the two key German pieces of data. We've got the ZEW on Tuesday and the German IFO as well on Friday. Both big numbers, both can have an impact on the DAX and also the euro. And then through the middle of the week, we've got the US housing data. We've got the existing home sales and the new home sales. Now, housing data last week was not all that great. The building permits and the housing starts were sort of underwhelming to a certain extent. So you want to think that the existing and the new home sales could show a pickup, because housing has certainly been fairly positive of the US economy of late. And then also in the middle of the week on Thursday, we've also got the manufacturing PMIs out of China, out of Eurozone and US in terms of the flash data. So they will give a first look at how these economies are all playing out in terms of manufacturing, and it will have an impact certainly on risk appetite. So that's it this week. There's a lot going on still, and I wish you good luck in your trading, and I'll speak to you again next week. Thank you.